Good afternoon. Welcome to the Educate2trade podcast with me, Chris Pollock.
And I'm Z.
Hey Z, how are you getting on this week? I know you had a nice weekend out in Cornwall what were you up to?
We finally got a little break. You know, like it's been 6 to 8 months of just market, trading every week in, week out. So I sort of spoke to my partner. We went out to Cornwall, we went to Newquay, and I grew up surfing in California. So for me, going from warm San Francisco in Long Beach water to like being in that cold mist was a
slightly
challenge.
Different surf, I imagine too.
Slightly changed.
No Mavericks.
So it was a lot of fun. I did a bunch of soul searching in that water. But I also did a crypto event for the group here. So if you guys ever sign up here, you guys can come to the office, and we got a little crypto cult going on the weekends. So it's been a productive weekend. Did a bunch. How was your weekend?
Oh well, let's not talk about the football, eh? But the week's good. The week was nice. We knew that this week was going to be heavily weighted towards the Fed, so I always take the opportunity that day to give myself a little bit of time to prepare. So I was hitting my first golf balls of the year, getting myself prepared. I'm at the Belfry this weekend to try and lose a few balls there. So yeah, got the shoulders unwound, ready for, well, what I would love to be a summer of golf, but in reality, probably about 5 rounds before the missus says I've got to help with the kids. So I'm trying to get them in early this time. See, but yeah, it was a nice week before we headed into all the heavy interest rate stuff that, to be honest, has tired me out no end the last 2 days.
Absolutely. On the weekend, especially after the couple of weeks we've had to take a little break from just the charts, from the fundamentals, and just unwind and do other things. So I'm glad we were able to do that. But there's a lot to catch up on.
Let's get into it, shall we? Well, I guess it would be remiss of us to not start with the Fed. This Federal Reserve rate decision, as anticipated, this was hold, right? Well, the market was pricing it in with a 100% certainty. So, yeah, with these rate decisions, you almost never get surprises, and they didn't go and surprise us at all today. So, yeah, we're seeing some an interesting view of these at the moment, but you get the idea. We had a rate decision at 4.5% as anticipated. What was unique about this one, or not unique, but what was special about this rate decision was that we had a dot plot as well, and the median votes were down. So they believe by the end of the year, we are going to get those what's priced in to be somewhere between 2 and 3 rate cuts before year end. So the market's kind of like that, and we'll take a look at the charts in a moment. If you can do a handstand, you might be able to follow it.
So we'll go to the charts now?
Yeah, let's take a look and see if we can see what's happening here. So if we can scoot over to the S&P and we can get this flipped the right way. Well done, thank you. We're looking at the decision, which was at the earlier time of 6 o'clock, right? We're still on this weird time zone. We've got one more week of this,
one more week.
One more week. I quite like this because I normally leave the office just after 5.
Right.
And that's just kind of when the market slows down. And then at 6 o'clock, the US get back from their lunch and we get a new impulse.
Absolutely.
I'm still here for that impulse. In 2 weeks' time, I'll be at home looking after the kids and doing dad stuff.
So could you tell the crowd, like, when is British Standard Time coming in?
So it's the last weekend of this month. So we've got one more week of earlier opens, earlier news events in the US, earlier closes, and then from so a week today will be the last day. We get 1:30 opens in the US, and then we're back to 2:30 until the clocks change in autumn. It's only 1 week normally in autumn, so that makes it in a way even harder because you just get used to it.
You get used to it.
And then it changes, whereas now I'm very much in the groove of this one. But anyway, we're at this earlier print, and the market's liked it. We did get a little liquidity grab. We did a live zoom through this, and this the NASDAQ at least went straight to the POC for the day, grabbed some liquidity before rallying. But we kind of want to hark back to what we talked about a bit last week here, right? We're not always going to get things right, but we talked about the fact that when Powell comes to do the press conference at 7:30, 6:30 now, his opening statement takes somewhere between 3 to 7 minutes, normally about 5 to 7 minutes. So by about 7:35 normally, this time 6:35, we're expecting a couple of minutes later that to create an opportunity. So we have to take a look back at this chart. You'll see this pullback. So this was the initial move at 6. Then we kind of had all the information we needed from the dot plots being more favorable. That led to higher stock prices. Powell began. we kind of liked his early chat early on there. Gave it a little bit of a pullback, and we talked about 837. Well, in here, that wouldn't have been too bad a buy, right? We often say, unless he's going to tell us some bad news, we're going to see a bit of a rally. And lo and behold, right, he was on a little bit later. He was still talking I remember seeing my watch, and he was still going at 38. Not quite sure exactly the time it finished. I wish I'd clocked it. But if you were long at this point anyway, right? I mean, you were offside by, what's this, 16s down to lows here at 12. So a 5-point stop or anything greater, you're probably doing okay. And we said maybe you might get a 4 to 5 to 1 trade out of this one. Well, if we got in at the 37 candle and we held it, even with a 10-point stop, you got like a 50-point move out of this, right? So yeah, the market's liked his press conference. They like the Q&As. And then also, as we said, there's kind of another big impulse when he puts the mic down, the mic drop trade.
Oh, yeah.
Because this is when all the big institutions have now got all the information. We've got the rate decision. We have the dot plot. We have the summary of economic projections. He's done his opening statement. He's answered every question from all of media, and he won't be saying anything for a few days. All the information is available. Then the big players come to town. And this is normally around quarter past. I think it was in this kind. I don't have the volume on here, but I think this one here at 18 was when he kind of put the mic down. And whoosh, this was my best trade of the night, to be fair, out here. I managed to catch all of this, albeit on the NASDAQ. Taking that a little bit lower. It did get chopped up a tiny bit towards the end of the day. But yeah, this was my kind of favorite trade. Just kind of caught this and was never offside. It really, really did me well there. So yeah, as we went through last week, we did talk about this. Hopefully a few of you managed to take advantage of that. But always remember this with the Fed. Whenever he puts the mic down, unless he says something untoward after that initial statement, we tend to see a buy. And when he puts the mic down for good, that seems to be when we get potential unwinds. This can be another impulse up, but just wait for those impulses when his press conference is finished, and you normally don't go too far wrong.
Awesome. So the ES had its movements. Another asset class made a all-time high.
Gold.
Yes.
Yeah, I used to be a gold trader in my youth. That was, for a big chunk of my career, was precious metals. So yeah, I do have a bit of an affiliation with that asset. Gold typically does well as a diversifier, especially when bonds aren't. And we've seen that a lot this year. Sometimes it has been, sometimes it hasn't. But whenever they're a little bit fearful of this, it tends to do quite well as a diversifier when stocks aren't. But also there's just central bank buying, right? Imports into the US as well. They've just record highs from Switzerland. We've never seen these, or I've never seen them before at this pace. So yeah, real, it's just a supply and demand story, right? This is a scarce resource, excess demand. Guess what? Prices will go higher.
So that's what happens with like sort of the markets where you have uncertainty with the dollar, with the euros. So you short that. But then things like commodities like gold, silver, Bitcoin make all-time highs.
Well, Bitcoin's not all-time highs again yet.
Not
Won't be long, I'm sure, Z. You'll be back to swinging from the rooftops, I bet, with those memes as well. But yeah, I think the Euro story is a really interesting one as well, with the stimulus that we had a couple of weeks ago.
Yes.
So that's one to watch. But yeah, Trump's still out there causing havoc, and April the 2nd is the date for your diary here, right? This is where we're expecting tariffs to truly kick in. And this was one of the drawbacks with the Fed, was that Powell was still saying, well, we don't know what the impact of the tariffs will be, and therefore we're not putting anything in place to account for that. But with April 2nd being tariff day, we're going to be towards the end of April by the time we get another Fed meeting. It might even be early May, actually. But by then, we might see those impacts coming through. And then these press conferences might be that little bit more interesting. Some of the statements may start to include tariff talk. Really curious to see how Powell copes with this, because Trump's not his biggest fan. He might have to thread the political needle a little bit on that one. But yeah, that's one for another 5.5 weeks away.
Right, so that's the 2nd of April. Everyone should have that marked out on their calendars.
Yeah, 2nd of April for tariffs. Or will there be? Who knows? I mean, this has been flip-flopping a little bit, hasn't it? Maybe there'll be some resolution. He's definitely using it as a negotiating tool, rather than really wanting to put tariffs on, it seems.
So a lot's about to happen. A lot's happened in the last couple of weeks. Would you like to give your opinion on the euro moves?
Well, euro, yeah. I mean, I haven't traded the euro since that big week. That was my my trade on that Tuesday when we got it. I heard that news through on the squawk here. if we look at, let's maybe go to like a 4-hour chart, probably tells the story pretty favorably. But yeah, we had this huge move. In fact, it moved on the Monday anyway. Maybe someone knew something I didn't. But when we got that news through right before the open, these live Zoom calls we do in-house at Educate2trade, we were live as this happened. And we got long, and a few of us, I'm sure, managed to take a little bit of cash. But it's not really giving too much up here, right? I mean, maybe there's a little head and shoulders sort of kind of pattern forming here, but I wouldn't get ahead of trying to get short this euro, given the stimulus we've seen. But yeah, on an interest rate kind of bond yield differential basis, it makes sense it's up here. Just a huge repricing. Makes absolute sense to me.
Absolutely. So that's the euro move. So we've talked about the federal fund rate. We've talked about the ES moves. We talked about gold. I'm not going to say much about Bitcoin because Bitcoin made lows, and I think it's going to make even lower lows as we get through the weekend. So everything is dependent on 2nd of April when it comes to crypto. So I haven't got much to say there. But we do have a week ahead. We do have a bunch coming to us. Do we have anything to look forward to next week?
Well, there's quite a few things on the horizon even before we get to next week, right? We've got today's option expiry, right? Yeah. So if we scroll back to something we talked to you about a month ago today. How have I done this? Here we go. We talked about the fact that on the podcast, I think we were around here at the time that Friday, and we got a big washout Friday afternoon. Excuse me. These are opportunities for the market to potentially turn. We got that turn, right? And in fact, I've recently worked out how you can select times on this as well, right? So I think I need to close this down to be able to do it. But if I go back to 2020, you'll see, where are we? Wow, so if I can, just basically change this to a 0, and that should take me there. Oh, that's not quite doing it. Let me escape out of this and try one last time without fat fingering it, hopefully.
There you go.
Won't be doing that on my trading anytime soon. So we go to this. This was COVID March 2020. So the same date, the 21st of Feb, when we did the podcast, albeit 5 years later to the day, we talked about this potential unwind and how big an unwind it was in the S&P. Mm-hmm. So again, it's not the same magnitude, but it's the same pace, right? The same shape. And we had this big washout through the Feb option expiry cycle, albeit we'll go back to the current one. It didn't quite nudge the lows into the March option expiry, which is Friday the 20th this time. But then the low was the Monday, the 23rd, the Monday after option expiry for March. And March is the biggest option expiry. This is the one where we see quarterly OPEX, like witching, quadruple witching, they call it, right? Tons and tons and tons of options are expiring in this. But these often create the biggest turning point, especially March and September. December's in the run up to Christmas can be a little bit more coy. June in the summer, less so. But March, September, always watch these. These are incredible potential turning points. Fast forward to today, we saw that big sell-off, albeit not taking out the lows. I still have a level on here on the SPX, which we didn't quite tag at 5,500. I still feel like we might get it, But yeah, I'm not going to lose my shirt trying to short the stock market after an option expiry washout like this. But perhaps early, maybe today, maybe into next week, we might start to see some of this seasonality come through. I think there's a seasonality image in here which we've got posted. Where would it be? Next one. Here we go. So this is am I in green? Mm-hmm. Here we go. This is the seasonality of the S&P 500. So tends to not do particularly well at the start of the year, especially poorly around that February option expiry, but normally it's found a footing by now. And I guess it almost works pretty closely to this around early March that we got a turn. It's been a bit later this time, but this window now till the summer or until the selling may go away phrase kicks in, this is the best time for stocks. In terms of like move without drawdown, seasonally, this is kind of the best time. So yeah, as much as I want 5,500 on the SPX to be tagged, and then I can kind of like scratch that itch on the options data, which was never quite triggered. I'll still be mindful of that as we go through the first couple of weeks. But as we start to grind higher, I'll be quick to change my view on this. And there's nothing wrong with getting long on dips in the stock market if it is indeed going to post its usual beautiful March, beautiful April prints that it often does. These are two of the best months of the year for the stock market. So something to think about from a seasonality perspective, for sure, starting next week.
Amazing. So we've had seasonality sort of covered, and these sort of have huge impacts. And I think the viewers would really, really appreciate knowing more about. You can say fundamentals such as these, because I think most traders that we go through on the floors, they're technical traders.
Yeah.
So it's important in our sort of podcast, in our space, to talk as much fundamental as possible about technicals like seasonality, but also talk about expirations, talk about these things. But I think for the day, I think we've covered most of the things.
Yeah.
Do we have anything to look forward to for next week?
We have a question on Instagram.
Okay.
Is your financial analyst program still going on?
Yeah, I believe so.
So that is answered to Master Wu.
Hi, Master Wu.
Thanks
for asking.
Hello.
Thanks for asking. Any other questions from us, Russell?
Not at the moment.
Okay, well, this is your opportunity if you want something to ask of us. Just as we kind of rattle through what we've got to look forward to next week. PMI day on Monday, right? We're starting. I mean, this is kind of a not always the best week for data, but PMIs is probably the pick of them. You have to scroll the whole way through to Friday to find anything more meaningful or as meaningful. But PMIs, for those of you who aren't aware, a Purchasing Manager Index. This is the reason why traders don't care about GDP, right? Because PMI tells us what GDP will be. It's way more impactful in terms of market moves because it's like a live survey of all the biggest businesses in the respective countries. So when you know how each of the best, 400 manufacturing companies in France are doing, guess what? You know how the whole economy is doing. Mm-hmm. When you add in the services as well, you're covering all the bases live rather than seeing what the production was and then popping a number on it 3 months later. So this is a really big day potentially for Europe as well, with all the things that are going on there. So PMIs in Europe, France, Germany. Well, France kicks off at 8:15 on Monday. Germany 8:30. Broader Europe one doesn't really matter. Once we've had those ones, Germany tends to move it a little bit more, not always. Then the UK 9:30, and then the US get theirs done. So PMI day is always an interesting one in terms of data. Gives us a pretty chilled one for Tuesday, a lot quieter than that hectic Monday. If we look forward to later on in the week, we've got the budget, right? The UK budget is out. Rachel Reeves will have to explain how are we going to get this economy going? See, it's absolutely without a pulse at the moment in the UK. So she has her work cut out to try and find a way to get that started. Final GDP, like I say, who cares? And unemployment claims, I'd be more interested in that figure before we get to the PCEs on Friday. This one is the Fed's preferred inflation metric. Inflation wasn't a problem, was it, with the CPIs? Both lower on CPI, lower on PPI. So that's probably going to be, if anything, a downward surprise on PCE. This number doesn't tend to miss expectations too often. But if you put a gun to my head and ask me, is it going to be higher than 0.3 or lower? I would have to pick 0.2 based on those CPI figures that we got. But yeah, not the biggest week of news, thank God. After the week we've just had, 5 rate decisions within 48 hours is more than enough for me. Thank you very much.
Same here. It's a more relaxed week coming ahead.
That's it. And a little bit of golf for me this weekend. So I'm looking forward to that one. Any other questions before we sign off?
No.
All right, we're in the clear. Is there any final remarks?
Yeah, hopefully we have a good relaxed week and see more education come from us. And I want to tell the viewers to look into fundamentals more, not to base it all on technicals. And to look for things like seasonality, for expiration, for the fundamentals we see with Powell and fund rates and these things, because I think it's an important thing to sort of find a match for both things. Yeah, we like 90% of people who come into this office who want to advance their trading but have some experience, it is technical or crypto. Right? Yes. And it's such an easy kind of missing piece of the puzzle to begin with. Mm-hmm. At least as a solution, it's not easy to learn it all. So it is a process, learning the fundamentals. I wouldn't expect you to kind of pick this up day one, but the way we teach it here, you're kind of learning it around news events, and you can use these to create kind of objective trading opportunities. And all the while, when you see these come and go, you see how the markets react. You learn through live markets rather than reading an economics 101 textbook. And trust me, they are not exciting. They're not at all. So hopefully we can add a bit of life to news trading for those who are maybe missing that piece from their repertoire. And ultimately, the best traders in the world, the ones who make the most money in a single day, they understand the news. Technical systems can get you far, but in truth, they can probably only get you so far. And it's a really intriguing thing, economics, the financial world. When you get to understand the fundamental side, it really puts things into sort of like fruition when it comes to trading setups, when it comes to charting, when it comes to technical. So I think you have to marry the two. It's really vital for new traders to see that. So that's my message for the crowd this weekend.
All right, get yourself looking at some news events next week. Start with those PMIs Monday. You'll learn a lot, I'm sure, in that first few hours of the day. Plenty to get your teeth into. And we'll be back on Friday next week. Thank you for joining us. I've been Chris Pollock.
Me and Z.
Have a good weekend.
Take care, guys.